سلااو دکتۆر مایکل وایترز پرۆفیسۆر و یاریدەدەر لە بواری خانوبەرە لە زانکۆی هێرتفۆرد لە دوبەی کە نزیکەی 20 ساڵە لە بواری ئەکادیمیا لە دوبەی و بەریتانیا دەست بەکارە. هەروەها نووسری کتێبێکە بە ناوی The Essential Guide to the Dubai Real Estate Market. Good morning, Dr. Michael. Thank you to be with us today.
Morning, nice to be here.
If you don't mind, I have a few questions for you.
Yep.
My first question, do you believe that if the political situation in Iraq and Iran is stabilized, it could emerge as a competitor in real estate industry?
Okay, good question. So I think how I'll frame the response is going to be where I see Dubai in context with the rest of the Middle East. I think it's the leading global, the leading market in the Middle East for global investors. It has a bit of a safe haven status in the Middle East for surrounding investors, and it's benefited from that status, and there's various reasons as to why. I think the regulations, the transparency of data and sustainability, new forward-looking aspects, Dubai leads those metrics at the moment. I still see Dubai as retaining that #1 spot for the Middle East, but as the region grows economically, I'd like to see the region strengthen collectively, and I think that will happen. And smaller markets will benefit as a spillover from the Dubai momentum, if we want to call it that.
Thank you, Dr. Michael. How do you perceive the potential Iranian and Iraqi individual to invest in Dubai?
Okay, so coming from the first question into the second, Dubai has played that role as a safe haven real estate market. So some of the factors that are attractive for GCC and regional investors would be that the asset that you're buying is essentially backed and valued and pegged to the US currency, so that's a strong selling point. When we invest internationally, or when regional investors invest, currency risk and managing currency risk is such a big important part of it. So to invest in a more stable currency has an advantage. You're protecting and preserving your wealth rather than investing in a local market where the currency may devalue your real returns on your property. So I think that's a really strong, attractive component to it, as well as the buoyancy of Dubai. It gives 6-7% annual returns for investors. It gives you 12 to 15% long-run total returns. There's strong returns in any real estate market. So I don't see people having a discontinued focus on real estate in Dubai because of that, because of those metrics.
Thank you very much. So my last question is what location and type of property would you recommend for investors who are looking for high ROI in Dubai?
Okay, so it's a difficult question because I think there's so many variables that people would have to consider when they buy real estate in Dubai. But if I sort of go back to the basics, the classroom theory, the fundamental component would be about managing the cash flow. So things that would mean that my rent was more secure, things that meant that my rent, I'm likely to see more rental growth than another location. So that brings us back into the more central locations. I think a 2-bedroom entry-level investment would do better than the smaller units, because there's the demand for those larger units in those central locations. So I think that would mean that there's good returns, but also there's a liquidity argument. Real estate has two sides. You buy, you maintain a cash flow. You also need to think about the exit plan. So I think at the moment 2 beds or larger unit would do better, but I'd try and buy as much real estate in the central locations rather than in the suburbs. You also could leverage off the tourism. So I think units that are more central in the 5 centres of Dubai have more utility. You can live in them yourself. You can use them as your family could use them. you could also rent them on a long and short-term basis, whereas in the more suburban locations, in the further out, you're really only appealing to the end user, the people that are living in Dubai and the population that lives it and works it. So I think my view would always be, if you can go more central, you've got more cash flow opportunities within those spaces. I know it's general advice, but I don't want to get into the specifics at the moment. But as I say, the returns, the ROIs on Dubai, as covered in my book, I looked over the last 20 years. We were looking at a 12% annualized total returns, which is really strong. With the recent price growth since writing the book, you know, that would be 15% annualized. So there's some real strong growth potential, and I think when you compare that to other global markets, you're not going to see those. As much as we aspire to get good returns, there's volatility, there's price movements. That volatility is coming down in Dubai as the market matures. We have more data to make decisions, we have more regulations. So that has two sides to the argument. You probably less likely to make huge price gains, but you have the stability and the solid returns that I think will attract more foreign capital and therefore more liquidity to the market.
Thank you very much, Dr. Michael.
Thank you.